again for joining me here at kalkinemedia. I'm Rose Jacobs. Hydrogen stocks have become market darlings amid the ongoing green energy boom. With governments and industrial segments embracing hydrogen-based energy, hydrogen stocks have soared to lofty valuations. An unprecedented rally in hydrogen stocks may extend in upcoming times as investors across the globe flock to stocks engaged in producing clean fuel without emitting carbon into the atmosphere. The hydrogen industry was not so popular until recently due to the relatively small industry size. However, incumbent hydrogen companies need to scale up their commercial operations to cater to needs of the future. Interestingly, the sector has emerged as one of the fastest growing sectors globally, with significant investment and participation by worldwide governments and financial institutions. Against this backdrop, if you do want to try a hand at hydrogen stock picking, it is essential to complete your homework. Thorough research, along with reviewing of stocks fundamentals, are absolutely required to test the viability of the stock to determine if it's worthy to make a place in your portfolio. Since investment in green stocks is also done with an intention to support the global climate change cause, it must be thoughtfully tested that how much green a company actually is. First, check earnings growth. Earnings from shares of a company are the primary objective of investing. So, analysing trends in earnings growth is a good indicator if the company is performing well or not. Investors must check quarterly and annual financial reports of the company. Companies that show positive earnings growth trends are considered to be more financially and operationally stable. You can also do research on the projects the company is taking to enhance its earnings. Then look at green or blue hydrogen stocks. Green and blue hydrogen are the two main types of hydrogen fuels that encompass different environmental impacts. Green hydrogen is produced by the electrolysis of water into hydrogen and oxygen using renewable energy sources. On the contrary, blue hydrogen is produced using autothermal reforming or steam methane reforming to produce carbon dioxide and hydrogen. The production of blue hydrogen is not an eco-friendly process and produces significant emissions. Then evaluate the long-term strength. The stock market is volatile in nature. At some point, the company may lose its value in the market. Keeping those circumstances in mind, it's necessary to consider the long-term stability of the company. The trend line of the company should be smooth and head higher. Investors must look into the company's alternative projects and the utilisation of earnings. Investors should consider how the company is growing its revenue, maintaining debt levels, and positioned as per current trends in the hydrogen industry. Also, look at their management and board leadership. The evaluation of executive leaders of a company is a more valuable assessment than any other technical parameter. Companies that invest their profit in their growth increase their stability in the industry. It must be analysed as to what kind of expertise executives are bringing into the boardroom. So the final word on this, a rapid growth in the adoption of hydrogen energy in both public and private sectors has prompted investors across the globe to take active positions in hydrogen stocks. However, investors must always complete their homework effectively before investing to secure these great returns. And that's the very latest here at kalkinemedia. For more info, check out the website kalkinemedia.com. I'm Rose Jacobs. I'll see you again soon.